All right, let's dive in. Today, we're tackling one of the most powerful tools in business, the income statement. But I want you to just forget about dusty old spreadsheets for a minute. Seriously. Instead, I want you to think of this thing as a story, like a movie, showing you exactly how your business performed over the last month or the last quarter.
Now, to really wrap your head around this, let's compare it to its famous sibling, the balance sheet. If the balance sheet is like a single photograph, a quick snapshot of your business's health on one particular day, then the income statement, that's the full video. It shows you all the action, the movement, the story of how you got there over a period of time. So, what is it officially?
Well, the income statement, and you're going to hear people call it the P&L for profit and loss all the time, is basically a report card. It tracks your financial performance over a set time frame and tells you plain and simple whether you won, lost, or just broke even.
And you know, at its heart, this whole big story follows one beautifully simple formula. You take all the money you made, you subtract all the money you had to spend, and whatever is left over, that's your profit. That's it. Everything else we're about to talk about just adds the juicy details to this one core idea.
Okay, so every story needs a beginning, right? In the movie of our income statement, the opening scene is all about what we call the top line. This is where we see all the money pouring into the business.
And that top line has a name, revenue. It's the total sum of money you've earned from all your sales. Doesn't matter if you're selling lattes or legal advice, this is your starting number. It's the biggest, happiest number on the entire statement.
Now, here's a quick but really important pro tip on how this is tracked. Most companies around the world use something called the accrual basis. All that means is they record revenue the moment a deal is signed and the work is done, not necessarily when the cash actually lands in the bank account. It's a key distinction for understanding a company's true performance.
All right, so our story has its hero, that big, beautiful revenue number. But you know, every good story needs some conflict, right? A challenge. On the income statement, that conflict comes in the form of costs. This is where we start subtracting things. And the process is just a logical top-to-bottom journey. We start with our big revenue number, and then we just start chipping away at it piece by piece with different kinds of costs. First, we'll take out the direct costs of what we're selling, then the costs of just running the business, and finally, things like interest and taxes.
So let's talk about that first cost category, the cost of goods sold, or COGS for short. These are the direct costs. Think about it this way. If you're a clothing brand, your COGS is the price of the fabric, the thread, the buttons. It's literally the stuff that goes into the product you sell.
Once we take our revenue and subtract those COGS, we hit our first major checkpoint, gross margin. This is a super important number because it tells you exactly how profitable your core product is, all by itself, before you even think about your office rent or your marketing budget.
And this just brilliantly shows the power of the income statement, right? Gross margin isn't just some accounting term, it answers a massive business question. Are we pricing our stuff correctly? And is it costing us way too much to make it? If that gross margin is looking a little thin, you know you've got an issue with either your price tag or your suppliers.
Next up, we've got operating expenses, which you'll sometimes see called SG&A. Now, these are the indirect costs. This is the money you have to spend just to keep the lights on, whether you sell one thing or a million things. We're talking about stuff like your office rent, your team's salaries, and the electricity bill.
So after we subtract these operating expenses from our gross margin, we get to our second huge checkpoint, operating income. This number is fantastic because it tells you how profitable your core, day-to-day business operations are. It's really a measure of how efficient you are.
So, we've had our hero, we've battled through our challenges, and now it is time for the climax of our story. We are heading for the final outcome, the famous bottom line.
And here it is, net profit. This is it, the final number at the very bottom of the statement, after we have subtracted every single possible expense, including the last few things like loan interest and taxes. This is the money that's truly left over for the business and its owners. This is the number that tells you if the story had a happy ending this month.
Okay, theory is great, but let's make this real. Let's get our hands dirty and walk through a quick, practical example so you can see this whole story play out with actual numbers.
So let's say our company had a really great month. The opening scene kicks off with a strong $100,000 in total revenue. What a fantastic start.
But now here comes our first conflict, the direct costs to actually make the products they sold. The materials, the components, our COGS came out to $40,000. So we subtract that from our revenue.
And that leaves us with our first checkpoint,
a gross margin of $60,000. That means for every dollar of product they sold, they had 60 cents left over before paying for any overhead. Not too shabby.
But of course, you gotta keep the lights on. So the indirect costs of running the business, things like rent for the office, salaries for the team, that all totaled $30,000 for the month.
So after we subtract those operating expenses from the gross margin, we arrive at an operating income of $30,000. This is such a key number. It shows that the business's core operations are healthily profitable.
Okay, so we've seen how the story is written, we've seen how the numbers flow, but how do we actually use this? Let's boil this all down into a simple, actionable dashboard that any manager can use to check the pulse of their business.
Think of this table as your command center. First, you're going to check your gross margin percentage every single month to make sure your product pricing and your costs are where they need to be. Then, you'll check your operating income monthly to make sure your day-to-day is running efficiently. And finally, you'll look at your net profit, maybe quarterly or yearly, to see the ultimate result. Is there actually money left over to reinvest or to give back to the owner?
And that, right there, is the real power of the income statement. It's not just some boring record of the past. It's a roadmap for the future. It gives you the insights you need to make smarter decisions. So the only question left is, now that you know how to read the story of last month, what kind of story are you going to write for the next one?
American business and management. It's a big one. So, this is the big question we're going to tackle throughout the entire module. We're really going to explore what makes business in America tick, right now. So here's our game plan. We've got 3 main steps to guide us through. First things first, to get where we are now, we've got to go back. We'll start with industrialization. This was a total game changer for how business was done. And then we'll see how globalization basically blew the doors open to the entire world. Okay, so let's jump to today and see what that history actually created. And of course, we have to talk about tech. Its impact has been absolutely massive. We'll get into the nitty-gritty of the opportunities and, the challenges out there. So what's the point of all this? Well, it's all about getting to your end goal. See, everything you're going to learn here helps you build one really, really important skill. And that skill, it's understanding these core ideas: capitalism, innovation, and entrepreneurship. This module will give you the tools to tackle what's coming next for American business.